வாங்க ஒரு சிம்பிளான விஷயத்தை பார்க்கலாம்.
Okay, picture this highly frustrating scenario. You've spent your entire morning perfectly mapping out your breakout zones. The market is moving, the setup is absolutely flawless. But right when the trigger hits, you are completely stuck. Maybe you're stuck in a crucial meeting, maybe you're driving, or honestly, worse, you're staring right at your screen, but that deep-seated fear of losing money just makes you freeze entirely. And boom, you miss the trade. It's a painful, totally relatable reality for so many of us. Well, welcome to this explainer. Today, we are unlocking the 2026 reality of algorithmic trading for everyday retail investors right here in India. And listen, if you think automation is just for the massive institutional players, stick around, because you're about to see how the game has completely changed for all of us. Here's a quick look at our roadmap for this explainer. We're going to start with why automate your trades, then move into the SEBI rules for retail algos, explore code versus no-code tools, and finally wrap up with the 4-step action plan. All right, let's dive right into Section 1. Why automate your trades? Think about how often human limitations have caused you to miss out on those perfectly calculated trap zone breakouts. We miss setups all the time because we're stuck in traffic, we get pulled away from our monitors, or, like we just talked about, emotion takes over and that split-second hesitation costs us our entry point. This is where algos step in as the perfect emotional override. You see, an algo doesn't feel hesitation. It doesn't get scared. It just delivers pure automatic execution based strictly on the logic you programmed into it. But real quick, before we get completely swept up in the magic of automation, let's ground ourselves with a very necessary disclaimer. Trading inherently involves high risk. Algorithms are incredibly fast and perfectly obedient, which means they will automatically execute bad logic and devastating losses just as quickly as they execute profits. They aren't some magic shortcut to wealth if you don't have a solid strategy. So always keep that reality in check and, consult with a certified financial planner. Moving right along to Section 2, SEBI rules for retail algos. There is this massive, persistent myth out there that automation is some futuristic fantasy reserved exclusively for Wall Street or those huge hedge funds down in Mumbai. Or, even worse, people think it's straight up illegal, tying it to those shady scammers selling black box software with guaranteed returns. Now, SEBI absolutely cracked down hard on those guarantee scams, and rightly so. But the core technology itself, that is very much available and completely legal for you to use. So, to understand how we actually do this legally, we do need to define one piece of intimidating tech jargon, an API, or Application Programming Interface. Honestly, you can just think of it as a digital bridge. It's simply a secure connection that lets your strategy software talk directly to your SEBI-registered broker. Great platforms like Zerodha, Kite Connect, Upstocks, or Angel One, they all provide these secure digital bridges specifically for you to use. And that brings us to the golden rule of retail algos. Remember, selling unapproved algorithms that promise guaranteed returns to the public, strictly prohibited. But using an official broker API to trade your own capital inside your own personal DMAT account, that is 100% legal. Fundamentally, you are literally just automating your own mouse clicks. It's your account, your strategy, and your execution. Okay, let's jump to Section 3, code versus no-code tools. Looking at the landscape for 2026, you really have two distinct paths to choose from. On one side, you have the coder's route. If you know Python, you've got a massive advantage. You can use libraries like Pandas or NumPy to pull live market data and fire off orders to your broker's API in milliseconds. But hey, if you don't know a single line of code, don't worry. You are still completely covered by some incredible no-code platforms out there, like Tradetron, Streak, and AlgoBulls. Actually, let's walk through what the ultimate no-code workflow looks like, because it is remarkably straightforward. First, you just draw your daily trap zone lines right inside TradingView, like you normally would. Next, you set a simple TradingView alert, say something like, if Nifty crosses 24,063, send a signal. That signal, which tech folks call a webhook, instantly pings your no-code platform. That platform then automatically buys the call option in your broker account. Boom! You just built a trading robot, and you didn't have to write a single line of code. Which brings us to our final section, the 4-step action plan. Listen closely here. You must never, ever just blindly connect a bot to your bank account. You have to follow this exact 4-step framework to keep things safe. Step 1, define your logic. You absolutely must have a winning manual strategy first, like your exact mathematical trap zone breakouts. The algo only does exactly what you tell it to do. Step 2, backtest. Run your rules against at least 2 years of historical chart data to prove it actually would have made money. Step 3. Paper trade. Let the bot run in the live market, but strictly with fake virtual money. This lets you observe how it handles real morning volatility and slippage. You know, the annoying difference between your expected price and the actual execution price. And finally, step 4. Go live. But even then, strictly limit the bot to a maximum of one single lot, like a quantity of 25 for Nifty, until you've definitively proven that it works with real capital. So here's our core takeaway from all of this. Algorithms are an incredibly powerful, leverage-creating tool. They will flawlessly remove fear, greed, and that painful hesitation from your execution. But the algorithm isn't magic. The human, meaning you, must still mathematically define that winning strategy. You provide the brain power. The bot simply provides the iron discipline. And that brings us to the end of our explainer. You are now fully equipped with the 2026 Blueprint for Retail Algorithmic Trading in India. You know it's legal, you know exactly what tools are out there, and you have a safe, tested 4-step plan to get started. So I want to leave you with one final challenge. Now that you can finally execute trades without the heavy burden of manual fear, what trading logic are you going to choose to automate first?
இந்த வீடியோ உங்களுக்கு பிடிச்சிருந்ததுன்னா லைக் பண்ணுங்க, ஷேர் பண்ணுங்க, சப்ஸ்கிரைப் பண்ணுங்க. Thank you for watching.